The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, well, how's everybody doing out there? Been an interesting day today. So market sort of, we had an unemployment number come in, and it was better than expected on the number, but really, it may literally was a great number considering how, high they've been. But the unemployment claims came in, they're low, but really they just didn't factor in all the seasonal adjustments, and the market just wasn't that excited because looking at the auto industry and everything else really didn't come into play, and so really didn't have a dramatic impact as far as just a rate making the market go up. And that's one of the four factors. There's the fundamental factors, the news factors, when you're looking at diagnostic trading, and just sort of looking at things and what do you expect, what do you think is going to happen next. And again, I want to welcome you to the Diagnostic Trading Hour. And what we go over here is we go over how to maximize leverage, limit risk, and be one step ahead of the markets. And there's several different markets today that are moving pretty well. So you got the euro actually making brand new lows. You got oil that's down about 1%. And if we pull up an oil chart over here, we can see it's really just been trending down. And, it made a move up and then sort of gave that up. But like last night, you look right here, and it went 86.40 all the way down to 84, 60, 84.40. And we've been making a little bit of a retracement right now, and sort of saw the same thing over in the S&P. If we go check out the S&P right now, and we can see that as it's loading up here, that, the markets fell down and then it started pulling back up. And, it's just sort of a market cycle, things that go on. You got to be ready for that. And one of the things, I was talking to some of the traders today, and we're talking about, the number one rule in trading is survival. And, if you can last long enough, you can trade well enough, then you might actually be able to accomplish some of the goals that you're looking to get. And so you want to be able to, really survive in the trading markets. And to do that, you really have to limit your risk. And you want to focus on your risk first, and that needs to be the number one rule of trading, because it doesn't matter how much you make, it matters how much you keep. And, that's why one thing that we do is we always talk about Nadex. And Nadex lets you trade in these crazy volatile markets. And, we have some interesting things coming out like today after the close. We're actually going to be looking at some things happening like, Chinese GDP coming out. It's expected to be pretty bad. And so that's weighing on the markets. And if we have earnings releases, there's really low expectations on earnings releases sort of across the board. And that actually, sort of plays into the company's favor. Because if you think about it, if there's low expectations, it's easier to hit those expectations. And so, I wouldn't be completely surprised to, not see the market just tank, because a lot of these companies could easily meet or beat their expectations. Now, would those expectations be great? No. So is it going to make the market rally? Probably not going to make it go up like crazy. But it's something that, you definitely want to consider and think about that, low expectations, those expectations have been lowered a lot. And with that, that makes it easier for them to hit their expectations. Another cycle that's really important that you want to consider that's coming up, we got a couple different seasonal cycles that are actually coming around the bend, is we have one of them, which is earnings cycle, right? So we're about to go into earnings season. Yeah, officially it starts this week, but really it starts next week. And there's a lot of different great resources out there. One of the websites I like to use, it's really good. It's a free site. You just go to earnings.com, and you can actually go over to it. And like I said, it's free. And you can look up different companies, different earnings reports. You can listen to webcasts, conference calls. You can see what the estimates are, what the actuals are, and when they're coming out, and on what day they're coming out. And you'll actually see that coming out next week, we're going to have a whole lot more earnings taking place. So definitely keep, your eye on that. That's going to affect a lot of things, especially on the bigger companies. And, of course, we got, JP Morgan, all those other ones. But, earnings season's coming up. Why is that a seasonal cycle? What does that have to do with the seasonal cycle? Well, mutual fund managers, they need to actually meet or beat the market, okay? And they don't really care so much if the market's going down. But if the market is actually going down and their fund's going down, nobody complains too much, okay, because they're supposed to mirror the indexes in the market. But if the market is going up and their fund is not going up in value, people get really upset, okay? So ahead of earnings announcements, just in case things come in way better than expected, it's usually in their best interest to make sure they start loading the money back into the market and putting it in there. And they put it in. If the market goes up, great. They got to participate in the rally. If it goes down, hey, you know what? The market was bad. There's nothing I can do about that. We're not about timing the market. We're a mutual fund, et cetera, et cetera. So just be aware that you'll actually see that pretty regularly on the earnings cycle. Like coming into next week, you'll start seeing, there'll be a lot more institutional money usually flowing into the markets. And that seasonal cycle can definitely have a bullish impact. Not that it's just a bullish market, but it can have a bullish impact on the market. Another cycle coming up, and it's really an interesting one, is the payroll cycle. What happens in the U.S., sort of on the 1st and 15th of the month? Well, people get paid, right? Well, when people get paid, what happens? Money comes out of their check. It automatically goes into their 401k. And then where does it go? It goes automatically into their elections, which, puts it into mutual funds. And then where does that money go? Well, that money goes into stocks. And so there's a seasonal cycle that actually shows that over 90% of the gains in the Dow have actually happened around the 1st and 15th of each month. And when you combine the 1st and 15th with, say, like a Friday payday, that just makes it that much stronger. So, we'll see sort of how things come out tomorrow with the news and the earnings, how much that weighs on it. But let's say it's just a bad down day. What happens is all that influx of capital coming in can actually cause it not be as bad of a down day. Or, if it's an up day, it can cause it to be a great, just huge, big moving up day and have a big impact on the market. So just be aware that that seasonal cycle does exist, and it's not one of those things you're just going to trade on, but it is something that you want to be aware of. So that way you're like, this is horrible. Why isn't it going down faster? This is okay, but it's not great. Why is it going up really fast? Well, that's often the reason is because of just the payroll cycle, and that's a seasonal cycle. It's it's not anything special except for the fact that it's just a economic activity that happens in the U.S. on a regular basis. Whenever we're looking at the markets, we want to figure out different things, and we can check out the Nadex website. When you're going to check that out, make sure to go over to tfnn.com, click on Nadex, and sign up for an account. Okay, it's a great way to trade forex, a great way to trade futures. But you can log on over here. You go create account. Now you can get a live account with all the benefits of membership, everything, and it's only $100 to fund the account. Or you can just open a demo account if you want to start there, and you just click Open Demo Account. You fill in your username, your first name, last name, phone number, email address, hit apply for demo. They'll send you a password in seconds, and you'll actually be able to log in and hop on. And so, obviously just letting people know about that exists, that's a great option. They can go in there and check it out. And some things that are moving, you got like oil moving, and you got the euro dollar moving. The euro dollar making new lows today, and it just keeps making fresh new lows. You got corn moving all over the place. And they have access to all these different markets. And just to look at some of the markets they have access to, again, they got we've got a range of markets. They got stock indices, forex, commodities, and events. So let's check out the stock indices. And we go down here, and we can actually see they have the Wall Street, they have the US 500, the US Tech 100, Small Cap 2000. You also can trade the FTSE, the DAX, and you can go over here and trade the 225, so the SGX. Now, one thing that's really important is to notice on this one, it is the SGX Nikkei 225. It is not the CME Nikkei 225. So it's based on the SGX one. So you may want to make sure you're looking at the right chart anytime you're looking at this. Just like on the US 500, that's based on the CME E-mini futures. Okay, so you don't want to be looking at the full contracts. You don't want to be looking at SPX. You don't want to be looking at spiders. You can use those, but it's based on the movement in the CME E-mini futures. And there's a lot of different ones on here. They actually have examples. You can go in and you can look at different examples of how they work. And it's great, and they go step by step and lay it out for you. And you can go over here to Forex, and they have 8 different Forex pairs that you can trade. So you can participate in the euro dollar, pound dollar. You can go to the Aussie dollar. They got the US yen, euro yen, and pound yen. They also have the US Canadian and the US franc. So a lot of great examples right there. You can hop in, you can trade Forex markets, and again, it's only $100 to fund an account. You can do trades with barely anything in there. And one of the great things is your margin is fully collateralized, meaning I don't go in and put $100 up and I have, $200, $300, $400, $500, $1,000 risk. I can put up $20, $100, $1,000, and whatever I put up in my margin, that is my risk. And so that really helps you cap out the risk on your trades, but also helps you maximize your leverage because you still get that leverage to the upside, but you don't have it working against you to the downside. Now, you may be interested in commodities. So maybe you've been wanting to trade commodities. You hear about them all the time, but you just haven't really got into them. Maybe you've been an ETF trader or an option trader, and you'd like to trade them, but you're nervous about the futures market. You're nervous about everything that's going on, And the nice thing here is you're actually going to be a direct member of the exchange. So the NADEX, the North American Derivatives Exchange, is actually an exchange. You're a direct member of them. You're not going through an FCM. You're not going through a broker. All right? And you can participate in gold, silver, copper. You can also hop in on crude oil and natural gas. So natural gas, of course, the report's coming out like every Thursday. You can hop in and take advantage of that. And, again, corn and soybeans. So these markets, of course, are moving a lot right now. And it's a great time to hop in and take advantage of those markets as well. And they have a lot of different trading opportunities. They also have some interesting ones on binaries called events, where you can actually do a binary trade on the Fed funds rate, the jobless claims, the non-farm payrolls. And so it's really an interesting product right here. But most people, they're usually sticking directly to just commodities, forex, stock indices, and they're looking at like the bull spreads or the binary options. Okay. One thing is they actually did just release a mobile trading platform now, and so you can go on and you can manage your trades, whether you have an iPhone, a Windows Phone, or an Android. And you hop on, download the app. It's free. And, just take advantage of that. You can go on. And so that way, if you have to place a trade, you got to step away, whatever, you can monitor your trades directly from your phone. And that makes it really nice, so that way you can trade sort of while you're on the go. So let's go over and let's look at a couple markets real quick and just sort of see what's going on out there and check them out. So if we pull this up here, and we're going to look at the S&P 500 futures and see where they're going, where they're trading right now. And they're still heading on up. So they're heading up from that big drop they had yesterday after the Fed funds rate. They made the recurse, and they literally lost it all in the evening trading session leading up to Europe. And then trended on down even after the jobs report. Literally, instead of going up, they went down. And now they basically recovered that entire loss. So the market right now, is looking at like it's trending up. And so you could go in and you could actually buy a bull spread. And, don't let the name trick you here, so they go over bull spreads. So if you buy them, they're bullish. If you sell them, they're bearish. But that's, when the people go like, well, if it's bullish, then, can I sell the box? Yes, you can. And I always call them box spreads, because when you go in and if you actually draw it on a chart, it's going to look like a box. And so that's the S&P. Let's check out a couple other markets and just sort of see things, how things are moving around. We go over here. Again, we got oil. We can pull that up. We can also pull up the euro dollar. And so I'm going to open that up, and I'm going to open up a couple other charts right here, and there's our oil contract. We'll go ahead and open up the euro dollar on this one. And again, euro dollar making fresh new lows. I mean, check this out, 1.2170. And you cannot be careful enough out there in the markets, and especially when you're trading in highly leveraged products. So it's nice to be able to trade a highly leveraged product without the highly leveraged risk. And again, that's what NADEX teaches you how to do. And what I'm going to do is I'm going to actually be going into more details, more series as we move forward with the radio show to make sure that I can really help you understand how NADEX works and how it can help you as a trader limit your risk, maximize your profits, and just really put things in your favor. Make sure to go ahead and call in right now with any questions that you have. Okay, if you haven't signed up for a demo account, sign up for one. Call with any questions. I'd love to talk to you on the next segment. 1-877-927-6648. And international, 727-445-1044. All right, we'll talk to you soon. I'll see you on the other side. Bye.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers, where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, welcome back to the Diagnostic Trading Hour with Darrell Martin. All right, so let's check out a few potential trades here. We got oil. It's pulled back up, just right touching its highs. And let's say at this point, you're like, hey, I think oil's going to retrace. So based on your trading strategy or trading system, you want to go ahead and go short oil. So what we're going to do is we're going to go here and we're going to open up the Nadex platform. And we do that, we're going to go to Commodities Bull Spreads. We're going to check out crude oil. And it's going to bring up the different contracts that we have available to us. And what we'll do is we'll go in and we got to basically analyze the risk on the trades. And there's a lot of different ways to analyze it. There's a lot of different ways to do it fast and easy. And I'll be showing you some really cool ways to do it really quick and really easy soon. And so let's just say we want to look at a short trade. We're thinking a short, quick pop. I mean, it's been moving pretty fast, and we think it's just going to drop down over here. So with that, what we're looking at is a move down. So we got 85.27, and so what we're going to do is we want to find a spread that gives us the opportunity to make quite a bit of money and have very little risk in the meantime. So I can go over here, and I can check out the spread that's going to expire at 2 o'clock. And when I look at that spread, I can then find the one that's going to be closest to the floor or the ceiling. And in this case, since oil is currently trading at, I'll go ahead and share the screen. So that way, split the screen up so that way we can see both sides. And pull it over here. There we go. Made that a little bit too big, didn't we? So pull that over. And we're going to move this down, check out these markets, and go, okay, which one is closest to 85.29? Well, really, this 85.25 one is obviously very close. And so I can sell the spread even though the market's a little bit above it. So what can I sell it for? I can go in. I can sell it down at 85.10 if I want to. And I may want to go in. I may want to do what's called a straddle. So I go in and I put on one of these. Okay, $13 risk. That's it. And I place that order. And I go over here, and I can buy one. And so that way, if oil shoots up or down, I think there's a good chance oil is going to move, right? So that's one of the things that anytime you have an area confluence, you have a support resistance line, there's one thing you can usually count on, and that is movement off of that line. So, because there's going to be a lot of orders sitting there. So like right here, I mean, it could easily fly up, it could fly back down, and you want to take advantage of the market going in either direction. So this actually lets you straddle the market, buy it, and sell it at the exact same time. And when I go over here and I look at the trades, I put in my orders, got filled right away. And on these trades, have very little risk on the trades. And, if we want to calculate that risk, it's really simple to calculate your risk. Now, again, anytime you click on a ticket, it'll actually calculate the risk for you. Okay? So literally you can just go in here, you click that, boom, it tells you what the risk is. But maybe you're in the trade and you're like, I forgot what my total risk was on the trade. I'm trying to figure it out. You want to figure it out. Go over here and pull up the calculator. Just open a calculator on your screen there. And go, what's the average price? Well, I've got filled at 85.25 short. So my only risk is from 85.25 up to, or 85.12 up to 85.25. This is what's called the ceiling right here. And you'll even see that name right here, ceiling, market ceiling, inside the ticket. So when I'm looking at that risk and trying to figure it out, all I have to do is go, okay, well, 85.12 minus 85.25. So 13, I have 13 ticks of risk. And so if I go, okay, I have a 13 ticks of risk, every tick is worth $1. My risk on that trade is $13. I'm literally trading oil with a risk of $13, okay? And I may want to go in, that's one tick on a full-size contract. So you can go in and you can do smaller, but you could literally do a tenth of a full-size contract. You could do 10 of them if you wanted to. And so you go in, you put the trade on, then I look at, okay, well, what's my risk on this one? And so the risk, we go in and we're going to have to calculate that out. Again, now you could do it, but maybe you forgot, you just want to check it out. So 86.75 minus 85.49. So 126. All right, so I have 126 ticks of risk in this one. I'm sorry. So 85, like that doesn't really make any sense at all. 85.49, I'm going to minus it from the floor because I'm buying. Okay, so anytime I'm selling, I'm going to minus it from the ceiling. Anytime I'm buying, I'm going to minus it from the floor. The floor is on the left side, ceiling's on the right side. It's pretty easy because the floor is going to be lower than the ceiling, right? So 85.49 minus 85.25. And that's going to give me 24 ticks of risk. Every spread on Nadex, every tick is worth $24. So it makes it really simple. You don't have to memorize all the different futures markets out there and the Forex markets. That actually keeps a lot of people out of the markets. And so this makes it a lot easier for you to hop in and participate in the futures and Forex markets because you don't have to worry about all the complicated ticks and everything else. So with that, my total risk is $24 plus $13. I'm risking $37. And basically just banking on oil either moving up or down. If it does move up or down before expiration, then I have the chance to make a decent profit. So how much profit potential do I have? It's pretty simple to go over, and you don't even have to calculate it out, really. You can go here and go, okay, well, which ones did I do? And we're going to talk about that when we come back from the next segment. But really, the simple trick is 150 ticks of profit. So $150 of profit on this trade and $37 of risk. So that's a 5-to-1 risk-reward ratio on a straddle. The market goes up or down, have the potential to make money. All right, make sure to go ahead and call with any questions that you have, and I will see you on the other side of the break.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of tfnn.com. Futures and options trading involves risk and may not be appropriate for all investors. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to tfnn.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of tfnn.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of tfnn.com.
All right, well, welcome back, everybody, to the Diagnostic Trading Hour. And what I want to do is go over here and sort of show you what this looks like on a chart. And I'm going to go ahead and edit this one for you. And what we'll do is you can go in and you draw rectangles, and you can set them up to match your trades, okay? So this trade actually goes up to 86.75. It expires at 1 o'clock. So there we go. Put that on there. And 1 o'clock Central, okay? And then all the times in Nadex are listed as Eastern. So that'd be 2 o'clock Eastern, of course. And let's see here. And we'll put that on there and sort of line them up. And the reason I do this, it lets me sort of know when my positions are going to expire, lets me know, where they've reached maximum profit. And so I can go and I can look at this trade and go, okay, well, how much money am I up right now? I'm up 17, 18 bucks on the trade. And again, you can always, easily calculate out the risk and the reward on these trades. And so our total risk on the entire trade is $37. All right. So now that we're in this trade, we've went up, we've made a little bit of money. And we got to decide sort of, what we want to do. Do we want to keep trailing the market? Do we want to follow it up? How do we want to maximize our profit over here? And so we're up 20 bucks, and we're up 21 bucks. It's going up. So I mean, we're making some decent money, and that doesn't sound like a whole lot of money, but again, look at what was your risk. Okay. Now I only did one. You could have done 10, 20, 30, 40, 50. And we probably should start throwing some size on there for some fun, and going in and doing it. But if you go in here, and remember, we bought this right here at 85.49, okay? And the floor was 85.25. So I had a $24 risk on that trade. I'm already, up between $19, $20. And I mean, that's a great potential right there to be up already almost 100% return on my investment. And that is not 100% return like on margin, like on futures, because, you don't have necessarily return on investment on futures because you have to do like return on account size and things because you have your margin, you have your floating P&L, you have your mark to market and things like that. And then, of course, we got to consider the other side. How's that playing out? So on the other side of the trade, if I'm risking $24 on that side, and then we already, did the math on this earlier, but so $37 total, and $24 on that side, and $13 on this side. And I could literally look at this trade and go, you know what? I'm risking $13 on the way down, and I have different choices on what I can do, but I could literally go in here and choose to close out the trade if I wanted to. Okay, I'm up a little bit of money, recovered all the funds, so up $20 now. Remember, I'm only down 13. I only have $13 of risk on the other side of the trade. I can go in, I can actually close out this trade right now, and so I just go in there, it's sell price, it fills it in for me, and sell a little bit higher, make a little bit more, hit place order, that closes that trade out. All right, now I have one trade left on, and it has a very small risk. So I just made $20 on one side. Again, if I would have 10, I would have made $200, and that's just between last segment to this segment. Go in here and I go, okay, what again was my risk on this? 85.12. Okay, minus 85.25. 13 ticks, $13 risk. So I made 20, and I only have 13 risks. So now I only have $7. I have $7 in profit. And should the oil contracts decide to go back down, okay, if I would have 10, I have $70 in profit. And if the oil would actually start dropping before the box expires out, I could actually make some money going the other direction. So it's sort of cool. It can go up. You made a decent return. Now it goes back. You can make a return on that side as well. So there's a lot of different ways to play it. But if you like, wanting to get in there and you want to take advantage of things like straddles, strangles, and these aren't your traditional, call and put straddles and strangles at all. So you can just see how fast they move and the deltas. And I mean, this thing's just taking off right now. So it's depending upon exactly how you want to trade and what you want to do. But that trade right there allowed us to get in, make a profit, and even if the other trade expires worthless, then we actually still are up total combined on the trade we put on, which was the straddle trade. So there's a lot of different ways to trade Nadex, and one way it's really good too is you can go and you can actually use the Nadex market, and you can use it to actually help you for trailing stops. So sometimes you're in a position. Let's say you bought oil down here and it's moving up, and you're just really nervous about it falling back. You don't want to get back your profits, and sometimes we as traders could be a little bit guilty of taking profits too soon, right? We don't want to. We want to let them run as long as possible. But you could go in and you could put something like a spread on or a binary on to help hedge your current profits that you've made. So it's not just necessarily about hedging like your current position, but it can actually be used for hedging your current profits. And with that, you just go in and you basically just find a spread that would work out really well for you based on where the price is. And so if we're doing that, we go here and go, okay, well, what would be a good trade to do that on? And if we were looking at the same time frame, then we can look over here. We got the 85.25 trade. So that trade we already have on, so we got that covered, and we can go over and we can look at other trades and where they're at in relation to the market, and see if we can find a better trade that can help us actually lock in additional profit. So this one's up here at 86. So that 86 trade might be one that we want to actually take advantage of. We could go in and let's say we were long oil, like we actually had bought the oil futures, and so we could actually go in and sell this spread. And talking $40, go in, so you give up a little bit of your profit, but if it does fall back down, hey, you know what, you're hedged, you're covered, but if it continues to rise, then you didn't get out of the trade and cut your profits too soon. So one of the things that's sort of interesting on Nadex is you actually move sort of out of the risk management plan and into the profit management side of trading. And the reason that is because your risk is limited. So whatever your risk is, like on this trade, risk being $40, your risk is not going to increase. And you have until the expiration of the trade to be right. So on this trade, if you're looking at it, and we close that one out, and we go and go, okay, this is an $81 to $86 spread. So we can go on here again. We can always use the drawing tools, pop up a little box on there, a rectangle, and go, okay, well, 86 down to 81. And this trade has a little bit longer till expiration, right? It goes to 2:30, so 2:30 Eastern. So we go in here and we adjust our time, and we can also adjust our prices to match. So that way we got 86, and we can go down here to 81, and you can get it really, just spot on the money there. And you can even, change your box to make it match the color. So, okay, I'm going to short this box, and it sort of helps you keep track of the positions. Hit apply, hit OK, and now there's that trade. And so this trade has the potential to make quite a bit of money. It's only risking $40, but it can make $460. And so, very cool way to trade oil, not a limited way. And you go in there, and let's say you're doing 10 contracts. Now you're risking $400 to make $4,000. And there's a lot of benefit in doing that because now obviously you have incredible risk reward. That's only a 40-cent move on one oil contract. And whenever you're trading, you want to be able to make sure to figure out, how can I definitely maximize my leverage, limit my risk, and that's what this allows you to do. So go ahead and do that. We'll go ahead and place this trade. And that's a demo account. I encourage you to hop in there and just place some trades to see how they work. And, you can let it go up, you can let it go down. But go in, just place the trade to see how it works. We're going to hit place order. Now we're going to go short oil. Okay? So we went up on oil, we made some money, and now we have a couple other positions that are open right now. And let's go check those out, see how they're working out. Okay, so right here, we had our order ticket that got filled. We can go to working orders. I'll maximize the screen and shrink it down. Make it a little easier to see. And you can open up any segment you want. So if we click open positions, there's our open positions. We have a couple different contracts on here. So let's zoom in on that and check it out. Pardon me there, folks. Had to grab a drink of water. So we got 81 to 86 expiring at 2:30. Now we're down $90. That seems really big. That's the bid-ask spread, all that stuff. Now if it goes to expiration, you don't necessarily pay the bid-ask spread because it's going to settle out at where the market is, not the bid-ask spread. It's not like Forex where you pay the spread no matter what. Okay? So we have this over here. We also have other trades that we can look at. You're not stuck just in that one trade. And since you're not using all your capital up in one place, you can look at a variety of markets. So if we go over here and check out the S&P E-mini futures and pull that up with the US 500. And, we need to really wait for an ideal entry, but you can trade that. So I'm going to keep that chart up so we can, to see if something comes up that really lines up with just a good entry. But right now, it's sort of run up. We're just sort of asking for a potential, reversal right there, and could be getting us soon. So we got our trades on, and it's really interesting how you just get to sit back and relax because your risk is not ever going to increase. And one of the things we were talking about on one of the other segments is just literally whenever you're trading, your palms get sweaty, and the market starts ticking against you, and you're being a really good trader, and so you go in and you put in a stop loss. But if it starts moving towards that stop loss, it can get a little bit nerve-wracking. I mean, that's just part of trading. It's the cost of doing business. That's really how you have to look at it. It's inventory in, inventory out. But at the same time, you still got to deal with it. And with this, it's like I know my risk is not going to increase on this trade. No matter what, it's not going to increase. So I can allow this trade to go out there, and I can place trades on the market, and I don't have to worry about getting stopped out. I have time to be right. So now let's go ahead and check out a couple other things. Now, we went in and we did the bull spreads. Let's check out the binaries on oil and see how that works, because it's pretty similar in the sense of you can make money like on very small moves. And let's just say if a market goes flat, and that's one of my favorite things to do is actually trade binaries in flat markets because they're really volatile instruments in flat markets. And you can go in here and even think about what time are markets flat, especially like say the S&P during lunch hour, right? Or you go over, during the Asian hour. So if we go over here and we check out crude oil and we look at, the daily or the 12 to 2, and let me bring this up over here. I'll show you exactly how this works. So 12 to 2, and you have a variety of different binaries that you can take advantage of. So we just got to see if we can find some that are going to line up well with where the market currently is trading. I'll move that out of the way. So all these are, so we got the spreads up. We'll go back down here to the binaries. So 12 to 2. And we can make a variety of different trades. So let's say, we put on that trade that said we think the market's going to go down. But what if the market goes up instead? So how can we sort of hedge ourselves? And so you could go in and you could put on a trade. And this trade right here says the market's going to be greater than 86.14. So let's say the market does shoot up, and that's not just a massive move. So let's say the market does actually shoot up, then I can go and I can place this trade, and for $42, if it does fly up, it actually would cover all my risk on the short trade. So I can actually use the binaries to hedge my spread trades. So I'm going to do that. Go ahead and hit place order, and we get filled on that. So now I have that trade on. So yeah, I risked a little bit more. I was an additional $50. If it stays flat, whatever, that's really not going to affect me that much. And then, but right here now, if the market does go up, so that's another way to straddle. So really, in summary, what we've looked at so far is the ability that you can straddle the market by buying a spread and selling a spread. You may also want to buy a spread and sell the binaries, or buy the binaries and sell the spread. And this allows you to, not necessarily have to be completely directional. And this is great for announcements like unemployment claims coming out. I mean, if you think about just this morning, and we'll go down and we'll look at the S&P contract, and caught a lot of people, by surprise. I'm going to go in 1 minute. We'll check that out and see exactly how that is on the 1 minute bar so that we can really get down to it. And we go over here, and people are thinking the market's going to go up. And that's what all these orders are right here being filled. And so all these people got spiked out of the market. And you could have went in, you could have went short and long at the same time before the news announcement. You could have bought and sold a binary. You could have bought and sold a spread. You could have bought a binary and sold a spread, or bought a spread and sold a binary. So there's a lot of different ways that you could have taken advantage of it. But you can get in, and they have a whole new big group that actually goes to the end of the trading day that'll start right here at 7 a.m., so 8 a.m. Eastern. So you actually can get in before most of the news announcements, which occur at 7:30. Okay? So you want to make sure you definitely hop on, and you can take advantage of that anytime there's news coming out. And they'll start opening in here at 6 o'clock. And so you can hop on, and you can, the Chinese GDP is coming out, the market starts moving. That's a good way for you to take advantage of it. And one of the questions we got over in the Tiger Den is, what are commissions on the bull spreads? Well, that's a great question, and there's a really cool answer. There are no commissions. So you're trading directly with the exchange. You're a member with the exchange. You're not going through a broker FCM, so there's no middleman that you're actually having to pay in that process. So you actually are just trading direct with the exchange. So you have exchange fees. So now the next question is, well, what are the exchange fees? Because whenever you trade like CME futures, you're going to pay $1.14 aside, with the NFA fee and the exchange fee, and then you're going to pay your data connection fee. You're going to pay your connectivity fee. You may trade your trade rating fee, your commission. If the firm has a clearing fee, you can pay your clearing fee. So it can add up pretty quick, just on one future contract. But whenever you look at this, you can go, okay, well, how much is it going to cost me per trade? And so what I can do is I can show you basically exactly how it works. Okay, so if we go to nadex.com, you can see that they'll have all the details, the prices. Let's see, I want to say they have it over here, but it's 25 to 90 cents. There we go, transaction cost. And so right here, the trading fees are 90 cents if you do it for the first 1 to 10 contracts. Above that, on the same order, same position there, it goes down to 60 cents. And it goes down to 40 cents, and then if you do 51 or more, it goes down to 25 cents. So you get a huge discount as your volume goes up on a trade, and really can help you save a lot of money by not having to pay all that additional money in brokerage fees and connection fees and commissions and everything else. And if you consider the risk that you're covering, that you're saving, then that can really add up. I'll get back to any questions we got after the next break, and I will talk to you soon. Make sure you call in and ask any questions you have. We're here. We're available. And I want to hear what questions you got. 877-927-6648.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Hey there, welcome right back to the Diagnostic Trading Hour with Darrell Martin. We had a question on the last segment about exchange fees and exactly how exchange fees work. So they want to know, there's no commissions, okay? There's no, routing fees, clearing fees, all that other stuff. You just have the exchange fee itself, okay? So the way the exchange fee works is it's 25 to 90 cents a side, and with that, you're able to go in and place trades, and again, it's only 25 to 90 cents a side. Now, if the trade expires out of the money, let's say you sell a spread, okay, and on that spread, you sold it, it expires above the ceiling. Then they actually aren't going to charge you anything on that. And yes, there is. And and if you buy a spread and it expires below the floor, then you're not going to have to worry about that at all. They're not going to charge you the exchange fee. So it's sort of nice. You don't have to pay the exchange fee basically on a losing trade that got wiped out. All right? And it's not necessarily bad if it gets wiped out, because maybe you went in and you bought the oil contract and it flew up, but you sold the spreads to hedge yourself, which, again, is my favorite way to trade. And we'll probably actually focus on that tomorrow, where we go in and we just really look at in detail how to hedge futures and forex contracts using spreads. And I think that's one of the most important things you can learn when using these is if you're a futures trader, if you're a forex trader already, this is definitely a way to go in and reduce your risk. So that way, you can still have all the trades you're still doing right now. You don't really have to change anything, except for now you're able to go in, like I said, hedge yourself. Whereas if you don't do that, then you get stopped out very easily. So you don't have to use the spreads outright. You can use this. But let's say you want to get into the futures and forex market. You're new. You're trying it out. This is a much safer way to get in on the futures and forex market because you're limiting your risk. You're maximizing your leverage. And to me, it's just the best way to trade. I really feel naked if I don't trade without Nadex. So I always want Nadex either outright spreads or I want them with the futures. And I've had trades on where I went in, I had a $100 risk, and trade may go $300-400 against me, but I only lost $100 because I was hedging the trade. So make sure you definitely take advantage of that and go in and see exactly how it works. And we got the spreads on right here, so we'll see exactly where they expire out at. And you can, if you have a Nadex account and you're already in there, you can actually log in and check it out and see where that trade is going to end at after the end of the show here. But I want to make sure that just everybody understands, you hop on Nadex.com, and actually they have the transaction cost right there. Okay, so go ahead and check that out. You'll see exactly how that works. You can call them, too, and ask them to explain it to you in detail. But really, it's 90 cents a side, goes down to 60, 40, 25. And don't get caught up in the pennies. Look at the dollars. So I'm risking, $10, $20, $30, not $100, $200, $500, $1,000. So I definitely am all about reducing my cost on a trade, but I'm more about reducing my risk on a trade. I'm okay with paying a fee if I can reduce my risk. And again, exchange fees, you're paying them anywhere you trade anyway, as far as futures go. If you have any questions, make sure to call back in, and I will be talking to you tomorrow, same time and same channel here on TFNN.com. And make sure to stay tuned for later today. We got Ken Shreve and we got Tom O'Brien. Have a great day.